Hello and welcome to Good Investing. I'm Rachel Grunn.
And I'm Andrea Swick.
Thank you guys for joining us for another fantastic week of learning about commercial multifamily real estate. Well, we created Good Investing for a couple of reasons, namely because we want to educate busy professionals and successful entrepreneurs that there is a better way to invest without using up any of your precious time or energy, right?
Exactly. We want to multiply the money of our passive investors, and we want to multiply our money too.
Yeah, win.
Yeah.
We're really excited about today's guest. Speaking of money, she is our financing queen, literally such a maven in her industry. She says that and you'll hear it in today's episode, she talks about how she closes roughly $350 million annually in loans. $350 million in loans annually. That is insane.
It's crazy. Yeah, she is our go-to person.
Yeah, she's incredible. So, a little bit about Brandi Shotwell. She is a principal at Reno Capital Management, headquartered here in Dallas, Texas, and she's concentrating on debt and equity. She is a broker as well. So with over 20 years experience in finance and real estate, Brandi has had leadership involvement in over $1 billion in real estate projects ranging from commercial acquisitions to commercial development. She has organized funding, acquisitions, and development opportunities for multifamily investors, high net worth individuals, municipal growth areas, and manufacturing clients. Prior to joining RCM, Brandi was vice president at Edge Capital Markets in Dallas. Preceding Edge, she was vice president of Coronado Bay Capital.
Coronado.
Yeah, I'm not from California.
Coronado.
Do you want to take this as a California sentence?
And we should leave this off.
100%.
I'm just kidding.
Okay, we're going to take two for this yeehaw lady here. Preceding Edge, she was vice president of, what is it?
Okay, Preceding Edge, she was vice president of Coronado Bay Capital, where she was top producing originator of the company. Previously, she was a founding partner of Global Mortgage USA. Brandi attended Purdue University Northwest, where she studied business and marketing.
Quite the CV. Well, I'm excited to jump in.
The CV.
I can't wait to hear
the resume.
The resume. I can't wait to hear everything that Brandi's going to bring to the table.
I love Brandi. Not only is she super successful, but she is just a nice person.
Just the sweetest.
So easy, relatable. Y'all, I'm sure, are going to love her as much as we do. And here is Brandi.
Hello, Miss Brandi Shotwell. Thank you so much for joining us on Good Investing. We're so happy that you're here.
Thank you for having me. It's truly an honor to be here.
Yes, seriously, guys. This is like the queen of financing. We are so lucky and blessed to have her give us her very valuable time to be on this call.
Yes.
So tell us about you. Where do you live now? Where are you from? Kind of what brought you to where you are today?
Oh my goodness. So I am from a little small town called Gary, Indiana. That's where I was born and raised. And I moved down to, I'm in Dallas, Texas now. So I moved here 8 years ago. Yeah, it was like 8 years ago, like 2 weeks. We just had our anniversary.
Aww,
like 2 weeks ago. So yes, I've been down in Dallas for 8 years, and it's been absolutely amazing. So when most people ask where I'm from, I just say Chicago because, you know, where I was in Indiana, we were considered part of the Chicagoland area.
Oh.
Most people don't know where that little small podunk town is. So here we are. But yeah, it was definitely a spiritual journey for us. It was like, you know, God was telling us, hey, it's time to move. And when he speaks to you, you have to move. And here we are 8 years later, and it was the best decision ever. I'm just glad we listened.
Oh, that's awesome. Were you doing financing in Indiana as well?
Yeah, I was doing single family financing. So I've been in financing now for 23 years. And I didn't get into the commercial arena until we moved here. So all those years prior, I was on the single family side. So I can always speak to both sides because I have experience in both, lots of it.
That's amazing. And tell us how many deals in multifamily you have helped finance. Do you have that
Whoa.
number? I know it's
Or
a lot.
volume.
I know.
I
Yeah, or
do not. I do
volume.
not have that number. So what I can tell you, I do know my average per year is usually somewhere between 25 and 30. Obviously, when I first started, it wasn't that high, right? It grew to that. So the last maybe 4 or 5 years, maybe 4 years, I've been averaging 25 to 30 deals and about 350 million a year. Yeah.
That's
Dang.
amazing.
Yeah.
So you are the expert in
I
this
am
room,
the expert.
100%. Yes.
Own it.
Yes,
Yeah.
yes, yes. I could not do this and not know anything, right? Yeah.
Yes, that's so true. So
Yeah.
what made you want to make that quantum jump from single family to multifamily in the financing space?
Oh my gosh, I was a little drained on the single family side, and but I was willing to still do it when we got down here, right? And you're in a new area. I told you we really took a leap of faith because we came down here, we didn't know anybody, we didn't have any family, we didn't have any jobs. So
Wow.
nothing lined up. We just was like, we were like, hey, he said go, we're going.
Yeah.
So um, I I put my resume out. I was like, hey, I'll join a firm first before I open my own brokerage again. But when I would go to these interviews with the level of experience I had in single family, they wanted me to like manage all these people and work 6 days a week and run it like a sweatshop. And I was just like, this is really not what I want to do. And as a mom, not having that flexibility just really didn't work. And I got a call from a commercial firm in California. And I was so nervous because I was like, I have no idea about commercial real estate. That's the thing. The two are so separated that you can close loans. You can be a loan officer on the single family side and really have no knowledge of the commercial side, right? And so I had worked on over my single family career, I had worked on just a few commercial deals, but not to the level where I was an expert by any means. And so even I think the first thing, and this is I tell people this story, the first thing that really tripped me up was probably the lingo. That really got me. And I know, Rachel, I know you can contest to that because it will be the exact same meaning, but two different words. And commercial real estate, they use these different words, and it just makes it confusing. And you're like, what is this? So there was a book that I read. I can't remember what it was called. Something commercial mortgages, something about commercial mortgages that the new firm that I was working for said, hey, the owner said, hey, I started out with this book. Start out with this book. It will help you so much. And I did, and I felt so much better because when I would get when one thing about commercial real estate is your clients are very knowledgeable usually, right? You're dealing with people in the industry who know what they're talking about. And I'm like, man, if I don't know this, if I can't even speak to it, I won't be successful in this. So I spent so much time studying and learning and watching videos. It's unreal when I got on this side of the business.
That's awesome.
And can you explain, maybe for our listeners who don't know the difference between maybe a broker and a traditional lender, like what makes you different as a commercial broker?
Yeah, 100%. So a broker is someone who goes out to multiple lenders to find a product that fits that particular deal, that particular client, right? We act as the liaison um, between the client and the lender. And a lender is someone who lends money. And that if you can go directly to the lender and not use a broker on the single family side and the commercial side. The difference is that your deal, your program, your property will have to fit into that lender's specific guidelines. And if it doesn't, you'll either get declined or you won't get the most favorable terms. The benefit of working with the broker is that the broker has relationship with the multitude of lenders, both single family and commercial, and they can go out to their database and well, I can't speak to everyone else, but I can speak to me. I value my lender relationships. I build those relationships, you know, throughout the year. And that's super important because you want to know your lender's program and what they offer and what they can do and what it is that gives them the special sauce. So when you're working with a client, you're like, "Ooh, I've got the perfect lender for that specific situation." And if they don't work out, I've got 20 others that we can go out to get some terms for you. So the benefit is you go directly to the lender. The lender says, "Hey, this is what we can do." You go to a broker and the broker comes back with like 10 different options for you. So it just gives you a lot more flexibility. And you at least you know you're getting a good deal.
Exactly. You're shopping around the rate. You're not just going to one place to see what they have, or you're not putting in the work yourself. As a
Yeah,
GP, that just saves a lot of time and being able to trust you that you'll go out and get all
these
these different terms to come back to us. We know that
yeah,
we're getting the right
100%.
deal.
Yeah.
Yeah.
Yeah. And the thing about working with the broker on the commercial side too is we do have those relationships with those lenders and we are sending those lenders more volume. So even if you went direct to one of my lenders, you may not get the terms that I can get. So that's important too to know, especially on the bridge debt side. Fannie and Freddie, they're kind of set, but there are things that can be done and things that lenders will go out on the ledge for a broker that they may not do that with a consumer who's maybe only going to bring them one deal a year or one deal for a lifetime. They never know, whereas they have the relationship with the broker, they know they're going to get more volume, so they'll give more favorable terms and pull strings where strings need to be pulled.
I love that because I think for our passive investors, that probably resonates with them and helps them feel like, okay, yeah, the GP team is really looking out for our best interest. They want the right loan terms, and then they are going to be, more surefire that we're getting a better deal. Um,
Yes.
so that's good
Yes.
to know.
Yes.
Awesome. Yeah, so what about we talk a lot about on here why people should scale to multifamily or at least, commercial residential is because they are not having to vouch for the loan with their own income, their own credit. I take advantage of depreciation, which means I'm not showing a lot on my tax return, which means it's really hard for me personally to get a loan for a single family home, for a rental property or whatever. Now, how are we able to maybe leverage finances or someone else's asset statement in the commercial space versus the single family?
Yeah, that is a great question. The single family process is very daunting. And it is. You do have to have enough income to qualify. You have to have enough job history consistently. You can't have any gaps. You have to have, this 20% down, not all the time. I know there are like 3% down programs, but when it comes to investing in multifamily, I always say this, and I know everyone has heard this, but it multifamily is a team sport, and it truly is. And so the benefit is that you can invest passively. I invest passively. You invest passively, and we don't have to worry about credit checks. We don't have to worry about down payment. We don't have to worry about anything. We're like, hey, here's the deal, and we can invest X amount of dollars, and we can take advantage of those tax advantages of those benefits of being invested in a deal and really not even having to worry about it. It's like, you remember, I don't know if y'all remember this rotisserie that they used to sell. And they used to say, set it and forget it. And it's kind of like that. Not like you don't care about your investment, but it is really like trusting those GPs to, vet the deal, don't go out and get the deal, vet the deal, knowing that they're finding the right terms, knowing that the property is being properly managed, post close. But here I'm able to take advantage of this investment and not like, and be hands off. It's no requirement of me. I don't have to take away from my career or my W-2. And, I can invest in large multifamily. I can scale and invest in large multifamily. And for me, I don't have the time. I just don't. I just don't. So I'm blessed to be in this business, and I'm blessed to work with some amazing operators, and I know them well. I know how they underwrite. I know their character, and I can say, hey, here's X amount of dollars to invest in this deal. I love it. I love it. For me, as a woman and that is busy, a career, a mom, I don't have time to dedicate to investing like that. So it's super beneficial for me.
Yeah,
Yeah.
that's one of the reasons that we decided to also move into multifamily as a family, was just the scalability. Like, there's
Yes.
only so many, me, because I work in real estate full time, there's only so many single family homes we could buy with my
Yes.
husband's W 2 income. So we
Yeah.
had to look for a way that we could scale without having to look at our DTI, or keep doing like those credit checks to get another
Yes.
mortgage. So it
Yes.
just absolutely makes sense to
Yeah,
to
yeah, and
go
I
into
think
multifamily.
now, I mean, I've heard, because I'm not as savvy, but I know you two would know. Um, I heard that you can only do, is it 10 properties or is it
Yes.
five
And then you
properties?
have to get
10.
a portfolio loan.
And then you
Yeah.
have to get a portfolio loan. So yeah, it is, they've put when I was on the single family side, we didn't have those restrictions. So I did
Sure.
work with a lot of investors too. But now, yeah, you can only go so far,
There is
on
a
the single
ceiling, there's
family
a
side.
cap. There really
There's
is.
a ceiling. There's a
So
ceiling.
we're about to jump into the interest rate discussion, which I know is on everyone's mind. But before that, can we set the stage and maybe talk about, is there a gap between single family interest rates and commercial multifamily interest rates? Do you see, or are they pretty much in tandem as far as like what going rates are?
Yeah, so they're very close, I will say. I'm not 100% sure where, well, let me put it this way. I know where single family rates are today, well, like as of 2 weeks ago, which I think they were in the sixes. Is that
Mm-hmm.
is that where they still are?
Yeah, I mean, it all depends on your credit, right? It depends on your
Right,
credit
right.
and all that, and the type of loan that you're getting. But I would say they're
Yeah.
between 6.5 to 7.25.
7%, yeah,
Yeah.
and we're right there.
Okay.
So, on the commercial side, and obviously it depends on the type of loan and the terms that you choose, but yes, we are somewhere between, 6, I would say 6.5 to 7.5,
Right.
depending on the program. If it's a bridge program right now, it's definitely in the 8s.
Right.
Yeah.
Do you see it increasing, or what do you, like Rachel said, let's touch on that and figure out where we are right now in this market.
And what the implications of that are.
Yeah.
Yeah, so the rates are definitely, well, let me put it to you this way. The last 2 weeks, we've seen Treasury come down, the 10-year Treasury. 10-year Treasury move down means that rates are also going to move down. So yesterday, let's be specific, because people will be like, well, what? So today is December 6th, 2022. And yesterday there was a 20 basis point decrease in the rate on Freddie small balance. We're going to see that come across the board as the 10-year Treasury comes down. So if you're one of those people that love to look at the rates and see what rates are, I tell my clients to look at the 10-year Treasury when it comes to fixed term rate debt. Now, local banks, because we've been doing a little bit of recourse debt as well lately, they are based off of the prime rate. And I think prime rate is at 7% right now. So prime rate is at 7%. The bank is going to have a small spread over that. So, if you go to a local bank, you'll probably be around 7.75, 7.5, depending on, your relationship with that bank and how much you have in deposits in that particular bank. Fannie and Freddie, um, they're going to be, that 6.5 to 7% range, but it is coming down because the treasury is coming down. Now, we have another rate hike coming next week, isn't it? I think the Feds are going to meet and we have another rate.
It's the 13th or 14th, and then the results are like on the 15th, I think.
Yeah. So next week we'll have another rate increase. What that increase will be, I don't know. They're saying half a point, 50 basis points, but they didn't take 75 basis points completely off the table. So we don't know for sure what it will be. My guess is that the rates will trend back up, even if it's just for a little bit, before they start coming back down again. But it's been shocking to see what happened is, I think 2 weeks ago there was some report that came out. It was where they noticed that inflation is starting to come down, and that is what triggered the 10-year treasury. And so we'll just see. We'll have to see how it just keeps going. But watch the 10-year treasury. That's coming down right now. SOFR is what we use on bridge rates. SOFR and LIBOR. Typically, we don't use LIBOR as much anymore, but you watch the SOFR rate, it has gone up tremendously. And I think the last check I did, it was at like 4% or maybe over 4%. So SOFR is up there as well. And then the lender will do a spread on top of the SOFR. The bridge lender will do a spread on top of the SOFR. And that's how we're at, 8% or in the 7 handle. So yeah, single family and multifamily from an interest rate perspective are around the same.
And can you just break it down for our passive investors? That was a lot of mortgage speak and lending speak.
Yes.
So could you just break it down for them why that's all important and what they
Yeah.
should look for when they're assessing deals?
Yeah, absolutely. So when you're a passive investor, your GP team is probably going to share the package with you in terms of the PPM. Maybe they'll share their underwriting with you, and when you're looking at that deal, if it's a fixed rate loan, so if your GP team is going after a Fannie or Freddie or HUD, CMBS, or any type of fixed rate debt on their multifamily acquisition, then you can watch that 10-year treasury to determine what the rate is going to do. As a GP, as a sponsor, a lot of times we cannot lock the rate from day one, right? So we have to kind of predict where that rate is going to be. And if you have a good GP team, like the good ladies here, they're going to not just give you where the rates are today or what the best case scenario is, right? There'll be some type of buffer in there. With Freddie, the good thing about Freddie Mac loans is that you can lock from day one. So if the GP team is using Freddie Mac, most likely that rate is locked or it will be locked very soon. When it comes to Fannie Mae, that is not locked until later on in the loan process. They have like an early rate lock on some deals that they will allow, but usually we lock that deal a few days before closing, which means that that GP team is exposed for that 60 days that it takes to get that loan closed. So when that GP team is using a Fannie loan, you want to watch that 10-year treasury to see what it's doing, to see, okay, here's what it's done historically, here's what it could do, here's where it's at today. Do I think it's going to move a lot? When we were having these massive increases from the Fed over the last 9 months, 6 months, or however long it's been. Yeah, about 6 months. I mean, it was such a huge increase in a short amount of time. For instance, if you took a property down, if you had a property under contract in March and it took 90 days, the typical average cycle for a deal from start to finish, which is another difference between single family and multifamily, it takes us 90 days to close a deal from start to finish. So once that property goes under contract, in a 90-day time span, there was like 127 basis point increase, if I can remember the numbers correctly. But just think of that. So those GPs went in with, let's say, a 4% rate. And by the time it was time to close the loan, that rate was 5.5. That's a huge, or like say 5 and 5.3. That's a huge swing in a rate when you got a property under contract. That could definitely affect the numbers. And that's been part of that disconnect between, buyer and seller, and why there have been so many retrades in the market. Because it's like, hey, when I put this property under contract, the rates were here. And now that we're getting ready to close, the rates are here. This
Mhm.
deal does not look the same. It's not the same value to me or my investors. So, so keep your eye on the 10-year treasury. If the GP team is doing a bridge loan, if the bridge loan is not fixed rate, then you want to keep your eye on the SOFR. So SOFR, you could look it up. 30-day SOFR is what we track. And just type that in and Google it. So 30-day SOFR rate today. And you can track what that has done historically, where it is today, and kind of take your best guess of where it's going to be, if it's going to pretty much stabilize or will it vary a little bit until closing.
Awesome. Thank you for that explanation. And then
Yeah.
retrade just means basically asking the seller for a discount.
A discount, correct. Yep,
Okay.
exactly.
Great.
Yeah.
And last thing we want to touch on here, because obviously you're super successful, and I know your path to success was probably littered with a lot of lessons learned, right? Maybe some
Yes.
mistakes made. Do you want to speak to maybe one of those and how you were able to overcome it?
Oh my gosh. I Hey, I have made some mistakes in the past 100%. But one thing that I do is try to keep a positive mindset. That is, once I learned about, so there's this book that, this was like, I'm trying to see if I have it near me. No, I don't have it near me. But when I tell you this book is like the Bible for me, the second best thing, it's called The Power of the Subconscious Mind. And I read this book back in 2004, 2003, 2004, and it completely changed my life. So this was before The Secret came out, right?
Mhm.
And this book throughout has scripture references. So, if you're a believer and you want to you want proof of what he's saying, you have scripture to back it up. But when I tell you, this book is just absolutely amazing, it completely changed my life. And what it did for me was, when a mistake was made or something happened, instead of me looking at it as bad, instead of me looking at it as it, oh, this changed my life for the worse or whatever, I always tried to find the positive in it, no matter what it was, right? No matter what the loss was. I've lost hundreds of thousands of dollars in the past. I've made mistakes that, cost me a lot of money. None that I can really like say, oh, this or that. But what I learned is you have to always approach things with a positive mindset. That is super important. And I've worked with people that you all know, and I've said, hey, if you don't get your mind together and start thinking positively, and try to have a positive outlook on things, and always try to be optimistic, then you can create your own demise in your head, and it will happen. That deal will fail. You'll get the worst terms out there. Everything could just go bad. So for me, I look at them as life lessons. And when something happens, a mistake that I made, I just look at it as I'm grateful that it happened. And what was the lesson to learn from that? I'm thankful that it happened. What was the lesson? How can I learn? What did it teach me? And how can I change so that it doesn't happen again? And if you don't look at things like that, it, it's just you're going to make life so much harder for you for no reason.
Yeah.
You know what I mean? So starting every day off with gratitude, starting every day off with a positive mindset is super important for me. And it's been life changing for me. And so I really, I mean, I've made so many mistakes, but when I make the mistake, I just say, hey, what is the lesson to learn from that? And how can I
Mhm.
make sure that doesn't happen again? And I look back. So the thing is, when the mistake is made, oh, it can just feel like the worst thing ever. But if you approach it from that perspective, 3 months later, you look back and you can say, I'm so glad it happened because now I'm wiser, I'm smarter, I know more, it won't happen again. And not only will it not happen again, I can grow exponentially from that life lesson.
That's so good.
Absolutely.
I love that. So the power of the subconscious mind. I'm going to
The
link it
power,
Yes.
down below.
yes, yes,
And
the power of the subconscious mind. Wait, can I link it
love it.
down?
Oh, we,
No,
we
no, no.
will. We will in the show
Oh,
notes.
In the show notes.
Yep.
Yeah.
And
okay,
then
okay.
After it's all edited together. Yeah.
last question. What's your why, Brandi? You're very successful. What
Yeah.
drives you? What's your why?
So my why is definitely my family. My girls, I have 3 girls, 12, 14, 16. And what my mom was very successful. She was an entrepreneur. She owned a beauty salon for 50 years and she was constantly innovative in her skill and she grew so much. So not just not just growing her business, but she was the only person in our region who could do hair replacement for cancer patients. So it was like next level of not just a hairstylist that just does wash and blow dry and cut and color and those type of things, right? And she would get up at 5 a.m. She would study her Bible. She would cook dinner in the morning so that when I got home from school, I would be able to eat as soon as I got home because she's working, right? So she's not going to be home like most moms at 4 and 5 o'clock to be able to cook dinner. So she's going to start early. And then, that way I have dinner made, a home cooked meal every day when I got home. And seeing her operate in her business is what gave me the motivation to do what I do today, right? I can always remember saying, I want to be just like my mom, right?
Aww.
And so I want my daughters to be the exact same way. Now, I don't get up and cook dinner that early. I cook dinner. I cook dinner, don't get me wrong, but I don't get up at 5 a.m. and cook dinner. I get up at 5 a.m. and I have my routine, but it's very important for me for them to see a woman who can succeed in a business and especially a male dominated business.
Mm-hmm.
And so that drives me so much. And and I used to feel bad, for working so much, but they really appreciated it, right? They would be like, "Mom, like you are so amazing. Like we have no idea what you're talking about on the phone, but we love to hear you talk on the phone." And that just motivates me. And I hope that they are my why. And I want to leave a legacy for them. And I want to which is, why I invest as well. And I just want to be a good role model for them so that, they can be strong, independent women um, and make a difference in the world. And so they are my why.
That is
Love
so
that.
sweet.
Love
Yeah.
that. Yes.
So how can people get in touch with you if they want to?
So the best way is my website is renocm.com for capital management. So renocm.com. And my email is there. My phone number is there. And they can reach me through there. And we're doing a whole rebranding, revamping. So they should sign up for the newsletter. We'll have a free ebook, and we'll have some videos for them to watch very, very soon.
That is awesome. It'll actually
Awesome.
probably be released by the time this episode's out. So we're
Okay,
planning on releasing this one just after the new year. So definitely go and check out Brandi's website. Get in touch with her if you want to learn more or if you have financing needs in the commercial space. Thank you, Brandi, so much for joining us.
Thank you so much.
You are the
Thank
bomb.
you.
Okay, wow, that was awesome.
That was so good. I learned so much. SOFR.
SOFR, SOFR, is apparently
Go look that up on
a
Google.
very important thing that everyone
Yes.
should know about. Now, a lot of the things that she was touching on were for very sophisticated passive investors. I don't know many passives that are tracking those
The
sort of
SOFR,
metrics,
yeah.
the SOFR and then the treasury and all that kind of stuff. I mean, I think that's very sophisticated. However, if it makes you comfortable, do it, right? Like we just
Yeah.
ultimately want our investors to be comfortable. It's definitely not necessary, but we encourage people to do the extent of due diligence that makes them comfortable enough to confidently invest, right?
Well, I think that it actually really helps our passive investors understand when they see our deals versus other people's deals that they'll be able to compare it a little bit better.
Yeah.
You know what I mean? Like, I think it distinguishes one from the other. You'll know, like, is a team like a little more aggressive on the underwriting? For me personally, as a passive investor, I want to go a little bit more conservative on the underwriting. Those are the deals that I want to get in on, just because, I mean, they're kind of, the more conservative a deal is, that means that they're leaving opportunities for just in cases, just if something happens. Like, they're not just saying, okay, these are the returns you're gonna get, without actually putting in some parameters just to make sure that
Okay.
things are not whack.
Okay, I'm going to go on a tangent here, but I promise it's relevant. Do you know about styrofoam wedding cakes?
Yes, and actually I had a fondant. I was gonna say fondue. I had a fondant. Oh my goodness, this is behind the scenes for anyone who attended my wedding. A fondant, multi-tiered styrofoam wedding cake, and we had a sheet cake in the back.
Genius.
Because listen, we were paying for our own wedding. And we didn't want to spend thousands of dollars on a cake.
You should not.
So I think
And
we
you had
spent
what?
$700 on
And you
our
had
cake.
like what, one section that you guys could cut in the styrofoam?
Listen, yes, yes, we did. We had a little section, yeah, but it was like an 8-tiered cake, and then we had mostly all styrofoam. We had one section where we could actually cut it, and then we had the sheet cake in the back, ready to be like passed out.
And I bet your wedding cake was like freaking beautiful.
It was amazing.
Like no one would have known, right?
No,
You're like,
nobody
this is
knew.
stunning.
Nobody
Guys,
knew.
this is how it is with returns too.
You're relating it back together.
Yes,
I'm so glad.
yes, this is the this is the connector. Guys, do not get blinded by projected returns. You could cut into them and there's just styrofoam. Because like that's the thing, right? It can look beautiful. It can look glossy. Someone can throw together the most like sophisticated investor presentation that you have ever seen.
Yeah.
But when you cut into it, ooh, there's no substance there.
Right.
How are they underwriting? What sort of financing are they using?
Yeah.
What sort of sensitivity analysis are they doing?
Yeah.
So this is why it's so important to know your operators, feel comfortable in their level of conservativeness, right? When it comes to their underwriting, make sure that they're the broker, the lender that they're working with knows their stuff as well. Like it's so important as a passive investor that you also do that due diligence and do not get blinded by projected returns. I cannot.
Exactly. And that what we're talking about is underwriting, projected returns. All of that you're going to see when you have a call with us, when you schedule that consultation, we have that qualifying call, and we meet you, we all agree this is a great opportunity for you, you're gonna see our deals. And so when you see our deals, that's what we're talking about, is those projected returns. So when we talk about, is it 15% IRR? Is it like, what percentage is annualized return? What percentage will give you however much back when we sell? Like, that's what we're talking about here. Some teams could overinflate. Other teams are more conservative. So you want to go with a more conservative approach usually, because then you have better expectations of how it's going to perform.
Exactly. Guys, you should schedule a call with us. You can do that over on our website, goodgoodinvesting.com. We also have some awesome investor resources there. Stay tuned. Check Good Good Investing every so often, because we have some exciting new resources coming as well that we are so excited to announce. Yes. So definitely schedule a call with us. Get on our email list, just so that we can start presenting you properties and potential investment opportunities if you'd like. Until next time, Andrea, don't invest good.
Invest twice as good.
Bye.